G'day and welcome to the latest episode where today we're joined by Orbital Corporation, listed on the ASX under the ticker OEC. We're joined by Stephen, the CEO, Mark, the CFO, who together are leading Orbital's transformation into the specialist designer of UAV engines for military and commercial drones that it is. We'll dig into their go-to-market strategy, the shift towards commercial diversification, and where the business is headed over the next few years. Stephen, Mark, great to have you both here.
Guys, thanks very much for joining us. Obviously, we've got Stephen, Mark, CEO, CFO. Welcome.
Thanks, good to be here. Yeah.
How are we doing?
Well, first podcast, I've got to say.
A little bit of pressure. You're in safe hands. But before we get into the Orbital story in full, maybe if we just start with a bit of backgrounds. Obviously, there's been a bit of change in terms of management over the last couple of years at Orbital. You joined 12 months ago. You're sort of 2 years in. Maybe first of all, just a bit of background in terms of where you've come from and why you've joined.
So my background is predominantly aerospace design. So I've worked for all the large OEM companies, British Aerospace, Lockheed Martin, Boeing, Bombardier Aerospace. So travelled around the world designing aircraft the last 30 years. The last 10 years I've been working in the startup space, so running small drone companies like Carbonics, and worked for Project Isidore, which was a spin-off from Mirigan RAS Consulting.
Yep.
And that was a successful exit. We exited that business to a NASDAQ company 6 months ago. I've been working for OEC for 12 months now, and very excited.
Happy anniversary.
Yeah, thank you very much. Yeah.
And Mark, what about yourself?
My background's largely automotive and transport systems. So that's everything from air conditioning systems, steering columns, interior systems, cabin control units. So it's been very much an R&D based mechanical technology provider, and I've been doing that since the 90s. So I've had a lot of commercial experience and financial experience all around the world.
I was going to say, for a CFO, you seem to be rather technical or hands-on in terms of the technology itself, which is not the norm.
No, but that's many years of traipsing across Europe and the US with negotiating contracts and dealing with people like Siemens and Bombardier and General Motors and Ford and Alstom and people like that. So it's very much in my wheelhouse.
In the DNA. When we caught up yesterday, you mentioned that Orbital was $1 billion company in the late 80s, which is quite mad. I was only 3 then, so it made me feel young, which is good.
Interestingly, I started off as a chartered accountant in audit, and one of my first clients was the Sarich Technology Trust, which became Orbital Corporation Limited, or Orbital Engine Company, and it was a full circle. So I've actually... The buildings we're in now, I was there as a junior auditor back in the late 80s.
Just a couple of years ago. So just in terms of Orbital itself, maybe you just give us a quick rundown in terms of a 1 minute overview of what the business does today.
So what we do today is we design, manufacture and test UAV engines for long-range, high-lift capability UAVs, both military and commercial. Our engines are 2-stroke engines. They run on heavy fuel, which is aviation jet fuel, so that's the same fuel you're getting a Boeing 737, and that's actually quite technically difficult when you're flying at 20,000 feet with a 2-stroke engine. There's no oxygen. The heavy fuel is very low octane, so it's actually quite difficult to burn the fuel at that altitude. And we do that with our unique proprietary fuel injection system.
Yep.
Which allows us to get a clean burn at 20,000 feet, which our competitors really struggle to do. So that's our competitive advantage, and we design those engines for the likes of Boeing in situ, Textron Systems, and large Tier 1 OEMs.
And we were talking earlier, just in terms of, obviously there's been modern warfare and whatnot, and there's been a number of companies that have metaphorically gone to the moon in terms of their share price. Why do you think you guys have sort of been left behind, and obviously, this is what we're going to change?
There's a real misunderstanding and lack of awareness of what we actually do. And you can talk about Group 2 and Group 2, 3 UAVs. No one knows what they are. You don't see them on television. You see the little FPV Group 1 drones that are running around killing people and blowing people up. But in terms of what we do, because we're on the offensive side, if you like, it's basically surveillance, reconnaissance, intelligence. It's all secret squirrel. So the drones that we supply into aren't heavily advertised. No one knows that they're there. The whole idea is that it's surveillance.
But I'm assuming they're essential.
Absolutely essential.
But I think the business is also known for its automotive consultancy business in the past. So all the analysts who used to cover the stock in the past know it as an automotive industry, consultancy business, we're not that anymore. So there's been this change to UAVs probably 10 years ago, and now there's this seismic change happening in the market, particularly around the military and the commercial spaces where our products are very relevant in today's market.
And in terms of Orbital itself, so how does it fit in terms of the UAV or the drone ecosystem? Is it making drones? Is it just the engines?
It's just the engines. So we're platform agnostic.
Yep.
That allows us to go to the whole market and try and get our engine on as many platforms as possible. Gives us a lot of penetration internationally. So virtually 100% of what we produce in Balcatta in Perth is for export. We have small customers here in Australia, which we're growing, but it's a 100% export market at the moment.
And in terms of the revenue base at the moment, 95% is defence. Is that the right way of looking?
So if you go back 5 years, it was a single customer, single contract, single product business. So the process has been...
What could go wrong?
Exactly right. And what did go wrong was nothing to do with Orbital. It was a upstream of Orbital, and you're dealing with the consequences of that. So very much around diversification of both the product range, the market sectors, so be that commercial, which is an evolving, rapidly evolving route to market, and the defence, and then the geographic spread. So previously it was all about the US. Now it's Asia, India,
diverse.
Europe. It's very diverse.
Leads into my next question, just around what's actually changed. Obviously, you guys have been here 12 months, 24 months. How does the Orbital of today, what's changed since, obviously, single focus, single company, single product, etc. What's fundamentally changed?
I think it's that go-to-market strategy. Yep. And previously, we were known for tier one military applications. There weren't many players in the market, so we didn't really have any BD activities other than them calling us. So now we've got products that are applicable to what we call tier two military clients, like India, like Vietnam, like the Middle East, and also the rapidly emerging commercial market. So we've really heavily invested in business development to actually get some penetration into those markets, and it's starting to pay off. We've had, as Mark said, when we joined the business, 3 customers. We're up to 13 now. We're going to sign some more next week. So it's growing very rapidly.
And in terms of the go-to-market model, you talked to 3 different ways of going to market. Maybe you just run through those and why you think they work.
Yeah, so the historical part of the business has been this, what we call the partnership program, which is a bespoke application engineering to our standard core product, and that's done for a discrete customer use. So it's basically locked and loaded with that one customer. So whilst the core engine's the same, the interfaces and the application, the amount of validation and testing is customer specific. So that's the sort of the tier one military. The next level down is a hybrid between sort of commercial application and tier two military. So people in markets such as the Middle East and India just don't have the same level of validation testing and the same level of expectation as somebody in the US customers and Singapore, which are very heavily focused on validation and testing. And then the third and very emerging market is through power by the hour, which is basically a wet lease of the engine to the ultimate, to the drone operator. And what we see there is a massive opportunity in terms of being able to penetrate into a market that actually at the moment doesn't exist. We're creating the market. And because of our pedigree in defence, we're able to demonstrate high levels of reliability, high levels of performance, and that credibility really holds us in good stead with these customers.
And just in terms of the power by the hour, can you sort of give us a bit of a case study or a practical example, and just in terms of the revenue model or the margin profile, without going into specifics? Why it's so compelling, A, for you guys, and B, for a customer in terms of low CapEx?
So for the customer, it's a set and forget. They don't have to worry about what happens with an engine in their drone. The engines are basically fitted with a line replaceable unit, so they can be swapped in and out within 5 minutes. If there's a problem or it needs a replacement or an overhaul or some maintenance work. So that then becomes a rest easy for the customer. they're not trying to focus on the airframe or the propulsion system. Their expertise is in the surveillance and the payload that's on board, the gear that's on board doing the work. The airframe and the engine simply gets them viable, gets them in the air. They're paid by the hour, so we're going to be paid by the hour.
And I'm assuming in terms of CapEx spend up front for them,
it disappears because it's a rental.
And that's a pretty big barrier, I would imagine.
Some of these customers are quite large in terms of their fleet deployment. So one customer we're talking to wants to fly 65 platforms over a 5-year period. And that probably needs about 300 engines to support that operation. And so the large CapEx model has gone away. So there's no upfront discussions around engine prices. It's all about the hourly rate. And they're getting paid in hourly rates by their clients as well. So it's back-to-back contracts. And it's actually a small portion of their revenue that actually goes to the engine lease. So it's actually quite attractive to them.
And in terms of payback on the engine, what does that sort of look like on the
well,
assumptions?
It's a package of engines. So if you look at it as a contract over, say, a 5-year period, yes, we have to mobilise.
Yep.
So there's initial engine fleet that has to go in. And obviously, while your revenue is still growing with the deployment of the units, it's a 12-month payback in terms of that initial upfront working capital piece, and then it's clear cash from there on.
And in terms of the different, you talked about Group 1, Group 2, and that no one knows what the hell they are. What the hell are they?
So Group 1 is what they call small FPV drones.
Yep.
So
what's FPV?
So first-person viewing. So they're the ones you see on the TV.
Got it.
And at the park, they're the ones you see the kids playing with down the park.
That's what I'm playing with.
Sub 9 kilograms, what they call MTOW, maximum takeoff weights. That's the whole weight of the platform with the batteries and any payloads.
Yep.
So where we play is Group 2, Group 3. So that starts at about 9 kilograms and goes right up to 600 kilograms. And that's the MTOW of the platform. So again, when you start getting to around 600 kilograms, you need a lot of propulsion power to fly those UAVs.
And in terms of the actual technology itself, like what's the competitive advantage here? What does your propulsion systems and whatnot do that others can't?
So first of all, we have very great reliability on the engine. So we're up to 750 hours between overhauls, which is market leading. And
what would the standard be?
Just around about 250, 300.
Okay, so it's a significant difference.
Yep. And that translates directly to the low cost of ownership and operation of the engine to the end user. And again, just coming back to power by the hour, that allows that model to be very profitable.
Yeah, the overhaul period is more important for a commercial operator than for a military operation. Military operation, the drones sit in a shed or a warehouse or in the back of until they're needed, and they're deployed when they're needed. Under a commercial model, these things have to be flying the whole time. So, to put that in context, a 750-hour time between overhauls, it might equate to 4 or 5 months of actual flying for an engine. So if you're at 250 hours, you're basically having to replace the drone engine every 6 weeks. So that's just not feasible.
Yep.
So our military pedigree and the technology that we apply means that we're the only people in the market who can achieve those numbers.
And in terms of like sort of a record of how many hours flown and whatnot, do you sort of record that sort of stuff?
So we have mapping of the engine on board, diagnostic. So we have the engine control unit, which we design ourselves. It's our own proprietary software. So we do the concept of operations of the mission profile for a customer. We'll optimize the fuel burn for that engine, for that application. But that also does all the monitoring of the health of the engine, looks predictive maintenance. And so we get a lot of data from the engine itself. And it's quite important because that works in conjunction with the fuel injection system. You could replicate the mechanical piece as a competitor, but without the software running the engine, it's useless.
And in terms of how many hours, like what does that sort of look like, the history?
Well, we've just clocked over 1.2 million hours of
That's a fair few hours.
business with the Navy,
Yep.
US Navy. And that really is our pedigree in terms of the approaches that we're now getting from larger commercial operators, from later entrants into the drone market, from tier one defence primes from Europe, as an example, who have been out of the drone space, hasn't been a priority. Now they're realising they have to be in and that there's an opportunity. So that credibility just means that we're straight to the front of the queue.
And those marine operations, they're the harshest environments a UAV can operate in. All that salt spray, it's very, very tough on the UAV and the engine as well.
And in terms of how that looks against competitors?
So our competitors have really come from the gasoline space, not the heavy fuel. So they've come from the hobby world or motorbike engines, and they've developed into UAV engines. And there's some good quality engines out there, but they do struggle with the heavy fuel because, again, that low octane content, they're still struggling to get those engines to burn efficiently at altitude, which is where, when you're doing persistent ISR, which is long range, ISR with military.
What's ISR? What's ISR?
Intelligence, reconnaissance, and surveillance. That's where you need to be at 20,000 feet.
Yep.
And so that's a clear competitive advantage. We can do that.
And the other competitive advantage we've got is the fact that we can cold start down to minus 20, up to 50 degrees ambient temperature. And one of our customers at the moment doing final flight tests with trials with the with their defence force. Takeoff is almost 5,000 metres, so there's not a lot of air around, even when you're taking off, because you're dealing in harsh environments. This is a border security operation.
And you talked to the commercial applications, and we were mentioning earlier around the credibility that's built through defence and military as sort of best of breed in terms of testing ground, and that ticks a lot of boxes.
Yeah, look, we've gone from that's been the history of our engines has been a double-edged sword. So we've been known as the platinum, not just gold-plated, we're platinum-plated in terms of what we did. So that put a lot of inquiries off. People just said, well, Orbital's got great engines, it's just going to be too expensive. So, the work that our engineering team has done to refocus on cost reduction and bringing those, tuning those products to meet a commercial environment means that barrier's gone away. So we're no longer having major discussions with any customer about price, and we can maintain a very healthy margin under our new pricing structure.
But overcoming that perception in the market is where we are now. It's quite difficult. We are doing more trade shows. We're getting across to internationally to these events to get in front of customers and explain to them we are a different company now, and we do have these products at price points where commercially it makes sense.
Yep.
Yeah.
Let me just think when we're going to go to next. Can we talk, and then we're not recording, but just in terms of how big the market, on the commercial side, and how it's probably going to take a little while for uptake. Is that sort of fair to say?
Yeah, so the military market in the US, and they're basically the statistics and the information that we've got is healthy, and they're looking at $1.5 to $2 billion US worth of propulsion system expenditure in the next 5 to 7 years. The commercial market's a little bit more difficult to get a read on. At the moment, the barriers to entry for commercial operators are the regulatory approvals for operating in commercial airspace. Military don't have those issues, and they're generally operating offshore. But in those commercial operations, it's a much harder barrier for people to jump over. Now, the customer that we're talking to at the moment about Power by the Hour already has those regulatory approvals in the US. So they're one of the few parties that's already got that.
And in terms of the commercial sort of actual applications, is it delivering Amazon orders, or what does that sort of look like?
So it's not that last mile delivery. It's not the pizzas and cans of Cokes. It's the middle mile, business to business, point to point delivery. So we're talking to a customer now. They're capable of lifting 100 kilograms and flying 1,500 kilometers with that payload and delivering that. So there are still high value products that are going to be shipped, but the per mile is actually very, very attractive in terms of land transport.
So in reality, that would be like a logistics company moving stuff from one depot on one side of the country to another depot.
So then you still got your last mile.
Still got the last mile application. That doesn't change, but it's that middle mile piece.
That's going to be very difficult in urban areas, flying drones. We're not in that space, thank God.
And agriculture, we've talked about that. How does that sort of look in terms of crop spraying?
Well, it was interesting, and I don't want to give Jeremy Clarkson a plug, but Clarkson's Farm episode 3 on Series 5 shows that exactly, and that was a guy doing crop spraying with a drone, which was a very interesting piece. Now, the problem they've got at the moment, this is an existing product, however, it's battery powered, and they just don't have the operating range or duration to be of use, particularly in broadacre farming in the US and in Australia, where you need massive time. The farms are so big, and to get that coverage, you need the reliability of and operating time that only an internal combustion engine can provide.
And pipelines, how does that sort of fit as well?
So in terms of commercial, or
commercial, yeah.
So we've got probably 4 or 5 commercial customers right now. We've been on this journey pretty recently, so we've embedded our engines in their platforms. We've been through that integration process. So it's quite an interesting journey when they decide to select a new engine. They have to integrate it into the airframe, get all the systems working, do all the flight test development, adjust the CFG, all the operations that go with that. It's quite an investment for these companies. But once we're embedded in that airframe, they're very sticky. They won't change engines unless there's a compelling need to do that.
Yeah.
And so we've got about 4 or 5 customers commercially, as Mark alluded to in the ag space. We are looking at developing a hybrid engine to get those multi-rotor, durations up to about 5 hours from 40 minutes. So there's a bit of a step change there in terms of how the operations will do those spraying in the future. So again, we're going on this journey with these commercial customers. They scale as they get the BV loss, the beyond visual line of sight, long range approvals from the regulatory authorities. We will scale with them.
So the initial take up of commercial applications is going to be pipeline and infrastructure surveying, because that's a controlled airspace corridor that the approvals can be relatively easily granted for. The logistics piece will be a secondary take up of application, and I think the agriculture will be the third leg of that. So again, all very diverse in terms of the use case.
But I think that linear infrastructure surveying is really important. Oil and gas pipelines, transmission lines for electricity utility companies, they're currently surveyed using helicopters. Very expensive. They take photographs of the asset and then try and figure out if there's an issue with it. It's very shaky. The quality of the photographs are very poor, whereas a drone will fly that mission, that whole predictable. It'll do a 3D scan with LiDAR. It'll create a colorized 2D twin. A 3D twin. That digital twin, then when you fly that mission again, you just compare the whole thing in AI, and it'll tell you where the issues are, whether the land's moved or you got vegetation ingress, or there's a bolt missing on the top of a pole. It's very accurate, and it's very cheap to keep flying those missions.
And the use case argument for all of these commercial operations is reducing cost and increasing uptime. So we're not having to deal with helicopters. You don't have to deal with pilots. You don't have to deal with airports. You don't have to deal with
incidents.
All these sorts of things that really
safe.
It just becomes a very safe and easy process. And as Stephen said, that pipeline and that surveying piece is certainly a very simple business case once you've got those approvals.
To give you some sort of indication, New South Wales alone has 11,000 kilometres of poles and wires. Yeah, wow. That all has to be mandated to be surveyed every year. And when you've got that capability, you obviously do it more. You do it pre and post a storm season. You do it pre-bushfire to look at the vegetation ingress. So you actually get more data.
And in terms of the revenue profile at the moment, what does that sort of look like, or what has it looked like? Don't want to give any sort of
it's been patchy over the past few years. Interestingly, looking back after I joined, the biggest year of revenue the company had was the year it had recorded its biggest operating loss. So revenue is not so much the
be all and
end all historically. The last 18 months, the period of time that I've been on board, the focus has really been on fixing the business to enable it to be positioned to take advantage of opportunities that are coming up. So, we've completed our contracts with a DSO, so that initial production order and the development program for the 150 program finished in January. And I think, as Stephen said before, one of the problems with the defence focus is that the contracts are very lumpy. They're going to sign another contract shortly for a 350 program.
Yeah.
But in the meantime, there's 12 months of gap.
Yeah.
And that's the situation we're in at the
moment. But that's obviously going to smooth that. You've got a pipeline.
Well, what will happen? The commercial opportunities will smooth that out. Power by the hour is reoccurring revenue, and so that's very smooth. In service support, we've been very poor in capturing that post-engine operations value, and so we're very much focused on selling engines, but also in service support that goes with it.
So whilst that Tier 1 defence capability and pedigree will remain, it's about how do we wrap that up with recurring revenue and different revenue streams in different markets, and that's important because that then de-risks us from the viewpoint of being a pure defence play.
Yeah, because I suppose if you sort of draw parallels of the past in terms of one product, one customer sort of thing. You don't want to be beholden to the defence.
Concentration of risk in one product, one customer.
And you're operating with the same systems as well, right? In terms of defence to commercial.
The actual core engine is the same. The core engine technology between the different engine variants is the same. All of our engineering and development work has now been completed for our range of engines. So they're all proven, ready to go. And that's really, again, been the focus of the last 18 months, has been on getting those products ready for release and ready for launch. And without having done that work, we wouldn't have set the table, if you like, for what's to come.
And in terms of R&D, so it sounds like you've done a chunk of it in the last 18 months to be ready. Yep. Is there much more needed? I'm assuming there always will be an element.
There's more on the electronic side. So the engine range is developed now and maturing. We're just finishing off the 350cc engine, which we kicked off about 12 months ago in terms of a new product. We are looking at the power management systems. So we generate electrical power off the back of the engine, and now we then distribute that electrical power into the airframe. So it could be high voltage for onboard battery charging, 14 volts or 5 volts for the various systems on the platform. And as we've got one product, the Generation 2 PMS is coming out in November. That has some new features on there around remote start. So you can start the engine from the ground control station as opposed to putting a drill in the back, which is important when you're on the back of a ship that's in a rolling sea. It's quite an unsafe operation. But we want to expand that range of power management systems right across all the engines. And we do see that as an opportunity to sell those to the market as a standalone unit as well. We're also looking at the stator rotors, which generate that electrical power. That's something we buy in from the US, looking to bring all that in-house. And again, there's a market just for those components on their own.
We talked at the top in terms of sort of the forgotten one in the sector. What do you think sort of changes that over the next 12 months in terms of whether it's catalysts or deliverables?
I think there's two streams to it. The first stream is just awareness and getting that message out there about what it is and what we do, because I think there's large misconception about what Orbital does. The branding Orbital UAV probably doesn't do us too many favours, because we don't make UAVs, and that's the first thing people say. And then the second piece is really around the delivery of some of the opportunities that are in front of us. So we've got a very significant pipeline of opportunities stacked up. And we're not. It's interesting. We're at a point where we're not chasing the competitive tender to be the engine supplier. We are the engine supplier. We're waiting for our customer to be awarded the business.
To win the business. That's right.
I think in the last 12 months we've been very active in getting our engine integrated into platforms. We've expanded that enormously. We've sold 2 or 3 engines to each customer, and as they scale, we'll scale with them. Yeah.
So as an example, the customer in India that we're dealing with, that's been almost 2 years of work to get from hello, we're Orbital to we've now got the award of the business, and we're just waiting for their contract to come through.
How important is it about picking the right partner that's going to win? Obviously,
that's the big case. I mean, in the period up to when I joined, the company had been quite forthright in the terms of it was going to win the Future Tactical UAS system contract for the US Army, FTUAS, through Textron. And of course, when the president got elected, the program was cancelled. So that's just a very recent example of you can pick the opportunity. You can pick your partner. You don't have that level of control over who ends up with the contract. And the point for us is, by being multi-platform, we're not having to pick a winner. We can be in every space, and that's important for us.
And in terms of, if we looked in the past 12 months, what's been the biggest thing that's changed, particularly for you, Stephen, in terms of coming in? Obviously, Mark had already made it perfect before you joined, but coming in and sort of being able to, I would think you'd be somewhat hesitant 2 years ago to go out marketing this story heavily, given it needed a bit of a clean up, with all due respect.
Well, I think there was a big operational clean up in the business, which Mark had already started, which we've finished now. So we've stripped a lot of cost out in the business. But I think I came from the Carbonics, which is a commercial drone, doing those linear infrastructure surveying operations, understanding that commercial market in depth, and saying, hey, guys, we've got this fantastic product, but there's a bigger market and it's shifting. It's moving very, very quickly. The market. We need to get on board with this, and we're going to have to reconfigure our engines. Not a complete redesign, but we need to get to the price points that the commercial market will accept. And yes, we are in that tier 1 commercial market, and we still got more work to do in terms of driving the cost out. And that will come naturally through increased orders. We get more volume through the business. We can order more parts. The prices come down. So there's a natural process where we drive more cost out of those engines. So I think it's that realization that there's this big opportunity being missed at Orbital. Had this great brand reputation in the tier 1 military space, and that's great for us because everybody knows about us. But we weren't leveraging that in any shape or form.
Is it frustrating? That's a silly question, but in terms of actually building the pipeline and waiting for it to mature, is it? That these things are coming off the market. Is frustrated in itself over the journey, but is it? Yeah, I'm assuming it's going to be ultimately very rewarding, having gone through a bit of the crap.
Yeah.
So coming out the other side.
The markets in the US, the military markets and the commercial markets are different. Military, there's a lot of forward planning, so they'll say we need 50 engines starting in 6 months' time, and you've got a year and a half to deliver them, and that's great. And that's the old model that we had with the partnership program. The commercial market, they make a decision. They want the engine. They want it yesterday, and they want 3 or 4. And we've got to integrate this. We're moving quickly. We've got funding because the funding's come in. So it's a completely different speed to market with the commercial space. And again, we're still trying to reconfigure the business to be able to react to that. But we're getting there with that, and we're thinking about some good strides recently. And again, they're all going to pay off with those bigger opportunities in the background.
We talked yesterday, final question, but we talked yesterday about a scoreboard for you guys and the company sort of going forward. What would that sort of look like in, let's not make it in 2 months' time, in 2 to 3 years' time? Where does the business sit in terms of a makeup of, is it still 95% breakdown? Is it geography?
Look, we would see the commercial and defence business being 50-50 split. And then depending on how power by the hour opportunities arise, because they could be both defence or commercial operators. And sometimes there's a grey line between, it's a private operator operating in a defence contract environment. So is that commercial or is that defence?
Doesn't matter as long as you guys
really
get paid.
as long as we're there, right? So, the opportunities ahead of us in both sectors are significant, but it's really the commercial piece that will go from sort of 5% of our business to 50% that will drive a lot of growth.
And I think it's really important as a business, we've got to look at the trends where this is going. We're seeing what we call the persistent ISR, which is your tier 1 military in the US, evolving into a attritable ISR, which is a lower cost, high volume. The drone's still got to operate in those harsh environments. It's still got to come back. It's not a one-way mission, but the market's changing, and we've got to make sure we're ahead of those changes in the market, so we're ready, we're in a position to capture them.
Perfect.
And the development of that's the word I can never get out. Attritable market, if you like, in the US in particular. There's 2 things. One, it's a lower cost, but 2, it's avoiding the lock-in to a long-term legacy contract where technology is changing so quickly. So what the military don't want to do is lock themselves into a 10-year program of record with a traditional tier 1. They're happier to go with the next tier down of supplier and make sure that they're fast, got the latest technology, can react quickly at a lower cost. That's really what's driving that attritable market opportunity in the US.
It's got an amazing history. Looking forward to the next chapter and well and truly building the awareness. Well done in the last 12 months and bring on the next one.
Yeah, we'll look forward to coming back and doing a podcast with some real revenue news for you.
No, that's what we want. Well done, guys. Thanks so much for joining.
Thanks.
Cheers.